Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through Beyond Meat stock. This is not a company I have ever owned before, but it's one that has been very popular in the past because when it first went IPO in 2019, it was extremely volatile and it shot all the way up to $235 a share. And so there was lots of interest in this growing market of meat alternatives, and Beyond Meat is one of the leaders in this space. So today we're going to do some in-depth analysis on this company and see, does it look like a good investment at this price? So they have several partnerships with companies like McDonald's, Pepsi, Starbucks, KFC, Taco Bell, Pizza Hut, Subway, and many more. In 2021, their revenue was $465 million. And now today their market cap is trading down to $2 billion. So before, this company was trading at tens of billions of dollars for a market cap, and now we're down to only $2 billion. They have over 130,000 outlets worldwide where they sell their products. And in the last couple of years, they've done a good job growing their market share because the industry that they're in has only been growing at about 7 to 8% a year, but they've been growing over 20% a year. So they're definitely outpacing what the industry is doing. The only problem I have with this company is that one of the problems I have with this company is that they have only $40 million worth of equity on their balance sheet. And for a company that's worth billions of dollars, they should have a lot more than only 40 million on the balance sheet. So that's not good. The other thing is that this past quarter, they lost 4 times as much money as they did in the prior year. So that's also not a good thing to see. If we look at, let's see, we'll go down my checklist so we can see. The first one is has the stock been oversold? And I put yes, because it's down over 70%. This time last year, it was trading at $150, and now today we're only at 31. So it's definitely come down to probably a much healthier position, or much healthier place right now, if not undervalued, right? So then we get to revenue and net income. And we can see here, if we pull up, we can see that they've done a great job growing revenue, right? Especially from 2018 to 2021 here, these last couple of years, revenue has gone, it was 16 million 8 years ago. And now today we're at 465 million. So they've done a good job there. But for net income, the losses have only gotten worse, and they're still not close to profitability, it looks like. So that's where we have a problem. So that's going to get a no for that one. Now for their price to sales, I gave it a yes, because the price to sales of 5 with 24% growth, I think that's that's a sign that it's very undervalued. So I would give that a huge that's a huge plus for this stock, is that because before this stock was trading at a price to sales of, I believe, for 20 for a while and over 20 for a little bit too. And so typically the thing I like to go by is whatever percent revenue growth they're gonna grow this upcoming year, I like to see the price to sales be around a third of that number. So that's the ideal thing. That's what I would consider a good value or undervalued. Then we have price to earnings. It's not profitable, so that's going to get a no. Are they innovative? Do they have a moat? I put yes. This is a great example of an innovative company. They're making plant-based products, and I think their moat really comes from those partnerships. They have those partnerships with Starbucks and McDonald's. That's not something that any company can just come in and replicate. So I think that's a huge moat for the company. And I think what they're doing with making these new plant-based products is innovative. So that's definitely going to get a yes. Is it a growing industry? Absolutely. I've seen anywhere from 7 to 10% growth rates for this industry, but it's somewhere in that range. Return on invested capital, negative. Margins, negative. Cash flow has not been improving. And then we get to diverse revenue streams. Yes, because if we go to their investor presentation, we can see here in 2021, they did 240 million for retail in stores like Walmart, Kroger, Target, Costco, Sam's Club, Whole Foods, stuff like that. Then their second stream of revenue is restaurants, like how we said McDonald's, Pizza Hut, Panda Express, Starbucks, stuff like that. Then the third one, and for the restaurants, they did 76 million last year. So not as big as Their biggest one is retail. That's where they're making most of their money at, is through companies like Walmart and Kroger. Then we have international markets like Alibaba, and also even the Starbucks around the world. And that did $145 million of revenue for them last year. So I'm going to give that a yes, because that's good. They have, and how we said earlier, they have 130,000 outlets they sell this stuff through. So I'm going to consider that a diverse enough streams of revenue. Balance sheet. Let's go to the balance sheet. So they do have positive equity. I can say that. So that's going to get a check. But as you can see here, over the past couple months, it's gone from 264 million, or over a year ago, it was 264 million. Now it's only 132 million. And even on an annual basis, this company once had 384 million in equity, and now it just keeps going down. So that's not good at all. Healthy price to book to equity growth? No, it's shrinking. Now let's see, the price to book, I mean, it's going to be what? It's going to be 20 or something. I mean, it'll be okay, 13. It was 20. So I mean, it's shrinking though. So that's not healthy. And it's definitely not, the equity is a little over 100 million and the company's trading at 2 billion. So that's only 5% of the market cap, which is a no-go. And then increasing equity, no. We already pointed that one out. Then we have a healthy share count or a dividend, no dividend. I saw it's not like there's a huge share buyback program, but what I do like is that the share count has not changed that much. So it's gone up less than 1%, which is pretty much the same as, even year over year, which is fine. Then we get to our insiders interested. And if you go check, it looks like the last time they bought was February or March. So they have not been buying in this last 2 months when it's been trading down at these low prices. They have not been buying. So that's going to get a no. Then we get to the last one. Is it founder led? Yes. And I do believe they have a talented team that's working on getting these new types of products out there. So that's good. But the founder, I think he started the company in 2013 or 2010, something like that. But he's still the CEO of the company. So all in all, it's going to get a 9 out of 18 for a score, which is considered not a buy on my checklist, but I'm not a financial advisor. So make sure you're doing your own research there. Now, here's the interesting thing. Here's where we're going to get to my stock prediction. So what I did was I laid out the next couple years, laid out what they're probably going to be doing for revenue, how much revenue growth that would be year over year, what the price of sales is going to be, what their market cap will be, and then what the market size of the industry is doing. And because how I said earlier, they're growing the industry is growing 7% a year. And so right now it's about $6 billion. It's expected to be about 7.7 billion in 2025. So we're going to work our way up to that. Right now, too, if we check this, we can see they do have it says they have a 23% market share based off of this. Remember, you also have competitors like Impossible Foods, who that's a private company, but I believe they're coming public this year. So that will definitely be a threat to them, depending on what partnerships that company can make. But based off of these numbers, it's more like the market share is somewhere around less than 10%, right? So I'm not sure where some of these companies or some of these websites get their numbers from, but if we go through this, we can see that 2022 they're going to do roughly 580 million, which will be 24% growth. Right now it's trading at a price of sales of about 5. The market cap is 2 billion right now, but it was like 4 or 5 earlier in the year. So let's just say it averages out this year to be about a $3 billion company. Well, okay, so that's a price of sales of about a 5. Then we keep going. Revenue growth is expected to be about 720 million into next year. And I think that by then, I think this stock will correct to a more reasonable thing. Once again, the metric I use in my head is what percent are they growing by, and then divide that by 3. So if they're growing around, 21, 23% for these next couple of years, then the price of sales is going to be around a 7, right? A 7, maybe an 8. And so that's how I'm getting these market cap numbers. I'm kind of just thinking about that in my head. If they're going to grow around, 20 to 24% a year, then in 3 years from now, they'll do about $1 billion of revenue. and a price to sales of a 7 is where it should be. Maybe it's a 10, maybe it's, you know, it could be a 10 or a 12 or something. I think that's on the higher side though. So this could be this could be a $10 billion, $15 billion company, right? But I think they'd have to come out with a new type of product. They'd have to come out with not just meat alternatives, but something else like new drinks or something like that. And they are partnered with Pepsi, making different food and drink products. So there's definitely potential there. Or they have to make some acquisition or something. But with the competition coming into this space, and you know, let's say they could have, I don't know, maybe 30% market share or something like that. I see them doing about $1 billion in 2025, and I think a price to sales of 7 is reasonable. And so that's going to put the share price at $108 in 2025. So that's what, a little over a 3x on your money, it's about 3.5 times your money in the next 3 years. So that's a great thing. But how I said, currently I'm not interested in buying this. There's probably 50 other stocks that I would rather buy. But yeah, that is Beyond Meat. And so thank you for watching. I will see you in the next video.